The Dewan Rakyat has passed the Sales Tax Amendment Bill 2022, which updates the Sales Tax Act 2018 with a provision to tax low-value goods sold online and delivered to Malaysia. This is expected to bring the country an additional 200 million ringgit tax revenue per year. The proposed update was passed with a majority voice vote. Deputy Finance Minister Wan Datuk Muhammad Shah Abdullah said the expansion of the sales tax was one of the steps under the government's revenue sustainability initiative. He stressed that Malaysia is not the only one that will or has implemented such a tax, pointing to countries such as Australia, New Zealand, the UK and Norway, which have already imposed either goods and services tax or value-added tax on low-value goods. Currently, low-valued goods priced 500 ringgit and below are not subject to any tax when they're imported to Malaysia. This, however, has caused unfair treatment to local traders, as locally produced goods are subject to sales tax at a set rate. Muhammad Shahar said the policy has also been taken advantage of by certain parties who declare high-value goods as low-value items worth 500 ringgit and below to avoid being taxed. As such, the new low-value goods tax, which is targeted for implementation on January 1st, 2023, is expected to see a flat rate of 10% being imposed on such products. Home improvement retailer Mr Diy Group Malaysia saw net profit jump in the second quarter of FY22 to its highest level since listing, as quarterly revenue surged to a new record high. This was mainly due to an increase in total transactions and contributions from new stores amid the reopening of the economy. Earnings came in 64.6% higher at 135.19 million ringgit, while top line increased by 38% to 1.05 billion ringgit, surpassing the last quarterly high of 975.4 million ringgit in the fourth quarter of FY21. It declared an interim single-tier dividend of 0.6 cents per share. For the first half, Mr Diy registered earnings of 235.69 million ringgit, up 13.9% year-on-year, as revenue rose 19.9% to 1.95 billion ringgit. As for its prospects, the group remains cautiously optimistic, though it is cognizant of the impact inflation and rising interest rates have on disposable incomes. Mr Diy CEO Adrian Ong said that moving forward, the market is going to be more sensitive to external impact, and that agility, responsiveness and a data-driven approach will be key tenets of its management philosophy. Mr Diy's shares ended trading flat at 2.32 ringgit, valuing the group at 21.87 billion ringgit. Then Navy Chief Tan Sri Abdul Aziz Jaafar is said to have told the Public Accounts Committee (PAC) that something is gravely wrong with the decision of the Defence Ministry and Bousted Naval Shipyard (BNS) to ignore its views on the 9 billion ringgit littoral combat ships program. Abdul Aziz was among 9 witnesses in proceedings conducted by the PAC on the procurement of the vessels from BNS. The committee's chairman, Wong Kah-Wah, said that the Navy's views as end users of the vessels were not taken into account, which led to the original Sigma design chosen by the Maritime Force being changed to the Gowen design, following a suggestion by the Bousted subsidiary to the Defence Minister. The PAC also found that the contract for the project was awarded to BNS through direct negotiations, and that the terms of the job were not favourable to the government. In addition, payments made by Putrajaya were not all utilised for the project, resulting in a cost overrun of 1.4 billion ringgit, with 400 million ringgit used to settle bad debts from another vessel project. Meanwhile, 15% of the 1.7 billion ringgit worth of equipment stockpiled for the project is already obsolete. Agriculture and Food Industries Minister Datuk Sri Dr. Ronald Kiandi told Parliament today that Putrajaya's ban on chicken exports is expected to end on August 31st, said a Reuters report. This as domestic prices and supplies have begun to stabilise. Malaysia, which supplies live chickens mainly to Singapore and Thailand, halted exports in June in an effort to stabilise output and prices at home after a global feed shortage triggered by the Russia-Ukraine war disrupted production. The country now has a slight oversupply of chickens. According to the report, Kluang MP Wong Shu Chi slammed the ban today, saying it had forced Malaysia's buyers to purchase chickens from other sources. In response, Ronald justified the ban, saying it was temporary and that similar protectionist steps had been taken by other countries. When conditions are stable across the country, he said the government will make a decision to allow exports. He also said Putrajaya was examining factors like the stability of supplies and farming capacity to decide if it would review other measures such as subsidies and ceiling prices imposed on chicken and eggs after August 31st. Perodua has secured semiconductor supply that will last the automotive manufacturer until the end of this year. Its president and CEO Datuk Sri Zainal Abidin Ahmad said today that this will enable the company to proceed with its sales target of a record 247,800 units this year. Perodua has also sorted out a plan to ensure a full return by next month of production capacity of its vendor ecosystem, which has been affected by worker shortages and logistic issues. Zainal Abidin pointed out that while Perodua only hires local employees, its vendors do employ foreign workers. To address the labour crunch, he said Perodua itself has sent out its employees to vendors, while other vendors also shared their supply of workforce as well as other resources, including warehousing and parts arrangement, to ensure the whole production ecosystem continues to move. The arrangement means that production efficiency is currently at 85 to 90%, as opposed to 96 to 97%. Perodua's aggressive 2022 sales target follows a challenging 2021, which saw sales of 190,291 units against the previous record sales of 240,341 units in 2019. Overall, the carmaker has sold 145,689 units between this January and July, with July bookings coming in at 24,265 units.